Strategic media and public relations is bringing together dynamic companies, investors, and consumers like no one before. And we're doing it in a unique way while addressing the big changes underway in our world. Our world is fraught with both peril and opportunity. The world is changing. Long-term conflicts are shaping up over commodities, currencies, and influence. Political lines are shifting. Yet mankind moves on to meet the needs of a growing world. Newer, cleaner energy, medical breakthroughs, ways to better our lives, better ways to move into the future. Join us now for today's topic.
Hello. We've been talking for several months now about creating a new media company, Strategic Media and Public Relations. And you can check out our website anytime at strategicmpr.com. We're also available on Twitter, Facebook, LinkedIn, of course. And we'd like to go a little deeper today and talk a little bit more about what we have to offer as a company and really what makes us unique amongst the media and public relation firms that exist. So that's the purpose of this video, is to dig a little deeper and to give you a good idea of what makes us unique. So Chris, you and I, we go way back through our investor conferences, decades, and now it's amazing it's been that long. Yeah. And we would really like to take all of that information and knowledge that we've gained over these combined 100 years of experience between the three of us in our group, and to really help companies get attention that they deserve, and to really move in a new direction that really no media or public relations firm has ever done before us. And we're really excited to be bringing this to the marketplace to you now. So Chris, with that said, you and Dad have been doing this just as long as each other. Dad started the conference in Chicago way back in the 1970s. You got your brokerage license in the late 70s. We have a lot of experience. We've seen a lot of companies waste money, do things the wrong way. We've seen different campaigns and all sorts of things that really just, over time have gotten less and less traction in the marketplace. And, unfortunately, companies have wasted a lot of money trying, the same old thing over and over again and expecting different results. So, Chris, can you tell us a little bit about how you see things evolving in the marketplace today?
Well, yeah, Eric, there's an old saying, and it's appropriate to what we're talking about in trying to guide companies, public and private alike. Most of the ones we work with, of course, would be public companies, but not always. To in the year 2023, most effectively get their story told, and not just to investors, but in a broader way that sometimes will come back to investors as well. There's an old saying that a wise man learns from his own mistakes, but a genius learns from the mistakes of others. And I have watched well over 40 years now as I've researched companies and seen how they promote themselves, some things that I have done with them as well. You learn what works and you learn what doesn't. And that is a moving target. It's continued to change over the years. You and I have talked a lot recently with some of the initial companies that we're talking to about strategic media. A lot of companies have just thrown up their hands and said, and I've seen two extremes. The first one is the company that throws up its hands and says, we're stopping everything. No more webinars, no more IR firm at 8 or 10 or 20 grand a month a crack. No more of these failed email blasts, any kind of thing. And they do nothing, which is really not the position you want to be in. The other extreme is you see companies that, I literally saw recently a company, one with a $3.5 million market cap, that announced a budget of $250,000 to spend on IR, which was about all of the cash that they had. I saw another one recently that over 12 months spent $1 million on an IR pump and dump kind of campaign. And none of those things bear fruit for the most part. You'll see brief pops, but then not. So the way we approach things, and this is, those of you watching this, chances are we invited you to this video to give you a deeper dive into what we're doing and why we're doing it. You really have to look first, I think, Eric and folks, at how we got to the place where we're at right now, where for the typical company, and it almost doesn't matter what industry, if you're a small cap or startup company, if you're looking to go public and you're trying to get attention, it has become progressively tougher in the 43 years now that I've been doing this to get attention. And there are reasons for that. You know, the overarching one is that a lot of institutional changes on Wall Street, a lot of regulatory changes and more have caused what we call today passive investing to supplant traditional investing. I mean, Eric, you've heard the term the pink sheets.
Absolutely.
Before. You know, you're not old enough like I am to remember this, but your dad remembers as well. I'm old enough to once upon a time, every week, I held that sheaf of salmon colored sheets in my hand. And those were once a week we got these. They were the bid and ask prices of every publicly traded company that was not listed on a major exchange. So this is going back to the late 70s, early 80s timeframe. And what was really cool, even though I was working for a typical financial planning firm, we sold mutual funds and limited partnerships, tax shelters. We had a relationship with a larger brokerage firm until we started our own, where we could do individual stocks. And it was really fun to learn the art of investing and use the pink sheets, use other information, do your homework, and say, okay, what's the next IBM? You know, what's the next this company or that company? What's hot now as far as a new discovery is concerned, et cetera. And in those days, brokers, typical run-of-the-mill retail brokers like me, you could research those things, you could recommend them to your clients and so forth. And a lot of things have changed over time where that has almost been completely taken away as far as what your broker, if you use a stockbroker, can do. You know, when Edward Jones or Raymond James, an Ameriprise, whoever, you tell one of those people you want to buy a few shares of XYZ company, a fledgling mining penny stock, they'll have a stroke, you know, if they even understand what you're talking about. You know, the first thing that caused this was after the stock market crashed in 1987. I've written extensively on this, and especially recently when we're seeing the same setup with where Japan is concerned, that's going to impact global markets in the days ahead. The 1987 stock market crash was caused by two things, and this was even a commission that President Reagan set up to figure out what happened at all in one fell swoop. We lost 25% of equity valuation or so. Number one was Japan. I've written about this recently, won't go into it now. If you want those details, let me know. And number two was what was called portfolio insurance in those days. And without getting into those weeds, it was a technique where people used options and things like that to guard against, sharp downturns. And what happened was, because of the mechanics of the way this so-called portfolio insurance worked, the selling fed on itself, and it led to where there was just massive illiquidity on Wall Street. I mean, there was a stretch where you couldn't get a bid on IBM. And I vividly remember that back in those days. So despite those two things being the two causes of the stock market crash, this was the first foray by regulators who wanted to start getting everybody to behave the same way, sell the same stuff and whatnot. So that was the first time of significance that limits started to be placed on what brokers could sell as far as small cap stocks, which had nothing to do with the stock market crash, but that was the door opener. And I could go on all day on this, but I won't, because we've got other stuff to talk about. But a succession of things since then has led to the point where if you, as an investor, want story stocks, small natural resource stocks, whatever the case may be, you're largely on your own. The flip side of that is that those type of companies have got to make sure that they're effectively getting to those individual investors. And that really is where the disconnect has come from these days is how do we bridge that? How do we build that relationship between small cap companies or thinly traded companies, private companies that might want to come public at some time or have some other means to justify trying to market themselves? How do we get those people in front of the public generally and in front of investors specifically?
So with that said, Chris, with all the advances in technology today, online discount brokerage firms and these amazing trading platforms available to any individual investor out there, why is it so hard for small cap companies to get in front of investors these days?
Well, besides the institutional things, and here's what's really odd about this, and I've written about this extensively over time as well in a variety of ways. It has never been easier than it is today for an individual investor to buy a small cap stock off the OTC QB or QX. There's no such thing as the pink sheets anymore. Of course, they were finally done away with a little over about 2 years ago as we're recording this. I think it's been now by the SEC. So there's no such thing as just a gray market or pink sheet presence. You must have one of those better OTC designations, if not be on a NASDAQ or New York Stock Exchange or whatever. In those days of the pink sheets I referred to earlier, if you wanted to buy a small startup company, you had to call up a market maker, get a quote. You paid sometimes several percent commission in and out, depending on the company and its size and so forth. And it was expensive to do it. If you picked the right company, of course, it was worth it. These days, through your Ameritrade account or your Interactive Brokers account or whatever, for a pittance of a commission, it's just as easy to buy those kind of stocks today as an individual investor as it is to buy shares of Apple. So it's certainly not that there isn't a mechanism there to do it. But again, the question is, how do companies get in front of people? And I've got a list of things that I want to throw out there. And a lot of people that are going to be listening to this, if you're a CEO of a company or the IR director of a company trying to figure out what else you should be doing and maybe some things you might not want to waste your time doing and so forth. This is all food for thought. These are things that we address with strategic media and public relations to try and bridge that gap between the individual investor and the company, again, public, private, whatever the case may be. First of all, of course, it's a waste of time to try and find retail brokers who are going to, care about representing your company, because in most cases they can't do it, either because of the size of your company or their compliance department or whatever. So that, of course, is a non-starter to begin with. Another thing that I see, though, and you and I have seen this, we've lived this, there's one of the better known investor conferences, for example, that is dealing exclusively, or at least primarily, with resource investors, the gold bug audience, that type of thing. You go to a typical one of those conferences, the attendance is a fraction of what it used to be. The average age, and I joke about this, the average age of the attendees is about 106, and if you're a company trying to get new shareholders at a place like that, you're kind of wasting your time because you're talking to the converted. Okay. Now, look, I still go to some of these conferences for a variety of reasons. You get to meet a lot of companies. I get to network with other newsletter writers and analysts and things like that. But that is a forum that has lost a lot of its utility. Not entirely. I still like them, and don't misunderstand, folks. But again, looking at this from the standpoint of a company, you're going and spending time and money on essentially a stale audience. It's already tapped out, and I see people like this all the time at these conferences. Yes, you do get some new blood from time to time, but it's few and far between. So you need to realize that you need to try and find new audiences. You also have to understand, and whatever type of a company that you are, there's a practice that still persists, and because of technology. I mean, it used to be that if you were going to spend money on marketing, you would find one of the better firms out there that does what's called a magalog, and these are still out there, not as much as they used to be. but you'll find somebody that does a magalog, and you send reports on your company, you know, with some expert that is touting you to investors' homes. And in the old days, most everybody did that, of course, before the days of the internet, through the postal service. Well, today the costs are many times more than they used to be. Plus, now you've got the internet. And so a lot of this has been replaced now by doing email blasts and things like that. And I can tell you, and I've done this with a national investor, I've done this in conjunction with companies over time. I can't remember a single instance where an email blast paid for itself. And the other things you have these days, you've got these come-ons where you get a banner ad someplace, or you pay for page impressions, your name being out there at a website that is well traveled. And this, you know, a mutual friend of ours, Michael Fox, his term for this, not mine, was spray and pray. And there's a lot of firms that charge many thousands of dollars a month to do this, and there's virtually no return on this, because there are ways in which a lot of the purveyors of these services will show you that, oh, we've got X number of views, we got X number of people that open this, and so forth. I'll give you an example. You know, our relationship we have with Cision, and we've got the Cadillac plan that allows us to do a whole lot of stuff. But every day in my email, I get a report from Cision, which is a big amalgamator of newswire services and a lot of other stuff. Great tool that we use for our clients, and we're going to use more of for more of our clients in the days ahead. I get an email from them every day, Eric, and you've seen these because you get the same thing. And to give you a specific example, a story that I wrote, and I've seen this 3 or 4 times from the same particular outfit. The story I wrote on a company showed, by being in one particular place online, that between the mobile readership, because they break it down by who opens this thing on a mobile device or who opens up on a desktop, between a mobile device and a desktop, there was well over 500,000 views of this thing. Wow. And the ad equivalency, if I had paid out of pocket for this, was just under $1,000. You know how many identifiable responses I got?
How many?
0. And twice with 2 different companies where the same thing happened. I asked them after the fact, you know, did you see anything? No, nothing. You know, you've got people that can get phantom views of all manner. Bottom line is, if your phone didn't ring, if you didn't get people signing up through your website, if you didn't get meaningful, and hopefully more than just a few hours or a day, move in your volume or share price, if you're public, then this is nonsense. It's fantasy. So one of the things that, among many, that we do in getting real people to look, is that we don't do anything on behalf of the companies that we deal with that are not identifiable as being real people. We use opt-in type services and advertising where the only way that we actually pay for a name on a client company's behalf is somebody who not once but twice said, yes, I want Strategic Media's research and report on XYZ company. Okay. Didn't come to them unsolicited in their email box or anything like that. Okay. So that's key, is to get over this old spray and pray and use different tools that will get you real people. And another part of this, Eric, that we especially stress, even when you get real people to respond to a communication, there needs to be a relationship built with these people. This can't be a hit and run type thing, because people see that every day. And I think a lot of investors, even who were active on the internet and going to different investor websites, and whose, you know, name you may run across somehow, I think they're all jaded now, because there's so many come-ons. And, you know, look, if it was easy before for marketers to get your postal address and send you all kind of junk mail. How much easier is it now when you're not paying for the paper, you're not paying for postage stamp and all that kind of stuff? You just do it electronically. You can do it in 10 minutes and send a blast out. So people get inundated with this crap all the time. And people are used to seeing this excited, time sensitive, you got to do it today pitch. And very few efforts are being made out there to not only get people interested in, in our case, Strategic Media's report on XYZ company, but after the fact, we're going to keep in touch with people for our benefit as well as for yours, if you're a company that is depending on us to build your audience. So they're not going to hear from us just one time. They're going to hear from us when you put out an important news release. They're going to hear from us when something is in the headline that they probably watched on the nightly news that comes back to you. And that is going to build a relationship for all of us, so that people realize after a while that, hey, these guys really are different. This is not just a pump and dump and hit and run kind of thing, but this is real. This company is real. These guys didn't hit us with this and go away. They're still here, and they're giving us more valuable information. And another thing, Eric, too, that this is big. With the national investor, one of the things I've done on a very limited thing, nothing like we're doing with Strategic Media, is from time to time, some of the companies I already recommend will do thematic issues that are relevant to their company. For example, ones, and I've done a number of them. I've done one that's on the gold sector specifically. I've done ones on the new FANGs theme that I've talked a lot about over the last couple of years now, and it's the most important theme going forward in the future. And on that subject especially, every day, the average American, many of whom are investors, they're experiencing things in their life in the recent past, much higher living costs than any of us have seen for 40 years. So, just for starters, they're seeing things in the headlines about the U.S. losing its influence in the world. That has implications for all manner of commodities that we're going to have to spend a whole lot more money to import now until we finally get our heads out of our collective rear end as a country and start to take care of these things in our backyard, et cetera, et cetera. So one of the other things I think that has been lacking in a lot of the marketing efforts that companies have spent money on, and in this context, of course, companies, whether it's copper, lithium, uranium, cobalt, gold, silver, whatever, not only are people going to stale audiences, but they're not presenting the company in a way that the average person can identify with. And I've especially, as you know, Eric, I've had this criticism of the gold bug Pied Pipers, as I call them, for a long time. There are very sound reasons why the average investor, generalist investor, who is not really a gold bug, should indeed be interested in that space. But the problem is, if they, on their own initiative, decide that they're going to, do some research online for gold, they do a little Google search, guess what comes up? One of these circus barkers telling them that you got to buy gold because next week the dollar is going to be replaced by a new IMF currency, or the BRICS currency that's coming up is going to put the dollar out of business. And I'll just, wild exaggeration, if not complete nonsense, just spun out of whole cloth. And so that's one reason why, especially a lot of the gold related companies have not had much traction with their investor relations and whatnot, is if in any way they're joined at the hip with stuff like this, you just turned off 99.8% of the audience of individual investors out there. There are sensible reasons you can hang your hat on. And yes, some of them are controversial. Yes, some of them are a little scary, but you don't need to make up nonsense to sell gold. All of the things that we experience every day point to one or more investing themes. Not to get too far afield, Eric, but I've in one of my special issues I did a big presentation at the Money Show last fall on this about story stocks. There's investment themes on your movie screen. You go to the movies, the movie Blood Diamond years ago about the illicit diamond trade. Now you've got illicit trades in cobalt and all other kind of things in the world too. This is stuff people can see. So as a company, what we do for our client companies is we're not just saying, hey, you need to buy XYZ company. But what we're saying is, here's what's going on in the world. Here's what you just saw on CNN or Fox or CBS, NBC, whatever. This is something in the news that's affecting the world. Did you understand the implications for this as a consumer and as an investor? Do you realize that there are ways that you can position your portfolio to alternately protect and or profit from this move? And from a lot of once in a lifetime things that are taking place right now. So I can't stress that too much. I probably stressed it too much or more than we need. And the other thing is there's got to be some human involvement, going beyond just the email blasts and things like that. One of the things that we're fortunate to have with the apparatus that we've over a number of months been setting up to launch now as we're ending the summer is a mechanism where we don't just, even to people who respond to us, and now we're going beyond investors and going to media, to opinion molders, to influencers. And I'm just going to throw out one possible example, folks. Let's say you're a biotech company and you're working on a really cool breakthrough, something that if the average person understood what was going on, the average investor understood what was going on, they'd be all over you. Okay. It's one thing to get that idea out to people who are investors in a variety of different ways. It's something completely different to go to influencers, to bloggers, to people who are journalists in that area and journalists in your field and things like that, and make sure that they have the information on the company put in front of you, that they read it, etc. Because this will help reinforce in a potential investor's mind that you're for real, that you should be taken seriously. So in other words, they didn't just get a pitch on your company and said, hey, here's how wonderful you are, buy our stock. But in their local newspaper, they had a story about you, maybe because that's where your headquarters is, or maybe because that's where you have your clinical trials going on and whatnot. So reporters, bloggers, and things like that. And that's really a strength that we bring to bear with strategic media that you don't get from anybody else that's doing investor work or media work for you. And that's going to be one of the big differences with us compared to others. So what else? Did I leave anything out, Eric?
No, I think, Chris, that was a pretty comprehensive description and list of exactly the things that have been done wrong in the marketplace and things that make us unique and different in our approach with strategic media. And so thanks for really breaking it down in such a detailed way. And folks, I'm sure there's a lot more we could go into, and we'd love to have those discussions with everybody. Chris, Connie, and myself, we're always available to speak with you one-on-one. Feel free to contact us by any means, phone number, email, whatever is most comfortable for you. Our company has several ways to be able to help your company get the attention it deserves. Everything from a basic start media advisory service that we can do for your company for pretty much what you have in your petty cash box every month. And then, if you want to be a little bit more hand in hand with us, we have several other levels of engagement, and all the way to a full service suite of services that we can offer to your company. So we really thank you today for taking the time to listen to Chris and I, and we hope to speak to you in the near future. Thank you very much.
Yep. Thanks, folks.
We hope you got a lot out of today's subject. Make sure you avail yourself of the resources and contacts offered today. Subscribe to this channel for future topics and opportunities. And if you have any questions, drop us a line. Thanks for tuning in.